Alex Coffey at TD Ameritrade joins us now for the Trader Rundown for a big day of trading here. Alex, what do you think about the market action and how the market is reacting to the coronavirus?
Yeah, and so the coronavirus clearly has been the biggest story over the last, let's say, 3-4 weeks in terms of market action. It's led to the volatility when we've seen it, but the market's shrugging it off right now as you're seeing us push back towards these all-time high levels. But any type of negative update on that virus front, I'd expect to lead to some volatility. We're already seeing companies like Nvidia saying that their guidance is being adjusted for coronavirus concerns, and also big companies like Apple coming out and saying the same thing.
And you're actually watching a trade in Apple. What are options traders predicting for this stock?
And so it's one of those stocks that we know is widely held in investment portfolios, retirement portfolios. So I think traders often look at this one as maybe you already have long exposure, but when there's companies like Apple coming out and saying, hey, we may be impacted, we know we're actually not going to meet these estimates we gave you in our guidance because of this, our supply chain is going to be disrupted and our stores are actually closed, traders are saying maybe we need to put a little bit of protection on. They're going out to March, they're buying the 325, 320 put verticals for about $2.20. This is going to give them slight downside protection, maybe as a complement to an already existing long position.
And then another stock that you're watching, also connected to China, is Starbucks.
Yeah, and so Starbucks, we know in terms of brand recognition and the power of coffee that this company is an absolute powerhouse, but it's as affected by this as any other kind of company in this space in terms of if there's not people out on the streets buying anything, they're probably not going to the local Starbucks and buying these, buying coffee in the morning either. So Starbucks has been met with volatility as well around this, but it seemed to have kind of bounced back with the rest of the market in terms of shrugging off some of these virus concerns. That being said, traders, they like exposure to Starbucks, but they're a little concerned you may see more volatility. They're selling cash secured puts under the market. So they're selling the March 87.5 puts, about $2.50 below where we're trading for about $1.10, making that break even right around 86.5 to give them a little bit of downside room, and maybe they're comfortable owning the stock at that level.
Alex, you're around traders all day long. What are traders saying behind the scenes?
Yeah, I think it's one of those things where you look at all the major asset classes, whether that's the stock market, the bond market, and the gold market, and all of these things are pushing towards high levels that really we haven't seen in many years, in some cases of all time. When you're talking about the stock market, they're all saying different things, and a lot of people are thinking something has to give. The question is which one of those assets is the one that's going to step back, if there is one, and I think that's really the conversation that many people are having.
Looking at the broader market and the action within the commodities, the bond market, and stock market.
Exactly, and one being the risk-off area, maybe that's bonds and gold, and one being risk-on. And when they're both rallying together, it's kind of saying two conflicting messages. Where I think a lot of people are, whichever camp they're in, they're saying something needs to break.
Wow, we'll have to see what happens there. Thanks so much as always.
Thanks for having me.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.